welcome to another episode of Always Up to Date. I'm Denise and this is Yahweh, and we are co-owners of Always Bookkeeping. How's it going, Yahweh?
Good. It's starting to get a little cold out there, but you know.
But the weekend is supposed to be so warm, like warmer than our summer. So hopefully that happens.
Yeah, I don't trust the weather in Edmonton, so.
Yeah, that's right. Yeah, that's like 3 days away.
Yeah.
So today we are going to be talking about the benefits of business planning. And this is actually part one. We have a couple of videos for this, but so our quote today is from Abraham Lincoln, who was the former president of the United States. And he said, "Give me 6 hours to chop down a tree, and I will spend the first 4 sharpening the axe." And our statistic today is from Palo Alto. And so business owners who complete a business plan are 50% more likely to grow their business. So clients come to us, Yahweh, and they have an idea of what they want their business to be, but they don't have a business plan, or their business plan is really weak. And so they don't really know what direction they want their business to go. So this is why we're going to talk about the benefits of making a business plan.
Yeah, for sure. So one question that we always get is, should I focus on creating a perfect financial and cash flow projection?
Yeah, so lots of business owners think that that's where they need to start, is creating a perfect financial and cash flow projection. But really, that's probably one of the best things to outsource to an accountant.
Yeah.
An accountant can do it for you, and they can do it correctly. So many times we have clients that come in and they've done a cash flow projection, and it's wrong. So unless you have a qualified accountant to do it, you're probably going to be wrong. So I would say don't focus on the financial and cash flow projections. Find somebody, an accountant, a CPA, that can do that for you.
Yeah, for sure. And especially for small business owners, I feel like we focused on these projections on a very optimistic kind of approach when we do the projections, because you always look at it as if you're going to reach capacity within a year, and the numbers are really really optimistic, and sometimes if you're using it, to get a bank loan, then it's great for a bank to see that number getting higher. But if you're really using the business plan, to guide you on your business, then you want to be able to be as realistic and as conservative as you can be, because at the end of the day, if you have limited resources, this is going to identify which months are going to be your lower cash flow months, and how will you be able to fund payroll and other items that needs to be paid during those months that you need cash flow for. Yeah. So why should a business owner focus their time on identifying the items that make their business unique?
Yeah, so as a business owner, you should focus on identifying items that make your business unique, because you're the one that knows your business. You're the one that knows where you want to take the business. You want to find things that are unique to your business. There may be 100 different people that do the same thing that you do, but there's something unique about you and about your business, and you're the one that's going to be able to figure that out.
Yeah, for sure. And also, I know a lot of business owners will try and get all, the lower of costs, or the lowest cost in the market, the best product, the best customer service. You want to touch on all of those. While that's great, I think your differentiation will start to be better if you focus on 3 and be the best at it.
That's
you
right.
have a better chance of knowing what your customers are, and being able to know what those customers' needs are, so that you will be able to supply their necessity.
That's right.
And that's what's going to sustain your business in the long run.
Yep.
Yeah.
Exactly.
What should a mission statement include?
So once you've identified what's unique about you, you want to make a mission statement. Your mission statement is going to include what you want people to know about you, what's going to make it kind of stand out. And a mission statement should be just short. It should be something that you or your employees, the people around you, can say it. They don't have to question it. You know, we get people that come in quite often and they'll have a mission statement and it's like a paragraph long, and nobody knows it. They don't even know it. Well, I have it written down. You know, I can read it to you. You know, you want it to be short and to the point so people know what it is to be able to do it. For Always Bookkeeping, our mission statement is always up to date, always ready to make business decisions. So, you know, it tells kind of who we are and what we want people to know about us. Very short and to the point. You know, once we start hiring employees, they'll be able to learn it and know. And so I think it's easier for people to kind of get on board when they know what your mission statement is and what you're about. Yeah,
absolutely. And also your mission statement should solve the problem that you identified. I mean, we're all in business to solve a problem, right?
That's right.
That your customers are looking for solutions for. So
that's right.
Yeah. What should a mission statement not include?
Yeah, so you don't want to include in your mission statement first of all, the industry standards. We know that's what you do. If you're a plumber, we know that you're fixing plumbing, you know, sort of thing. You don't need to put that in. You don't need to, again, put everything that you want to accomplish as your business. Again, we want it short and to the point, kind of encompassing everything that your business is about. Again, like I said before, we don't want paragraphs and things that people are going to start reading and just, whatever. You know, they're just going to get tired of reading it and not get to the end of it.
Yeah, like while it's well written, it could be seen in a different corporation too. So you won't be able to, you know, distinguish yourself from your competitor if you're just going to put the general idea of what you do in the mission statement.
That's right.
Yeah. How many revenue groups should my business have?
Yeah, so that's a good question. The revenue groups, we recommend that a business have no more than 3. Sometimes there's circumstances where you have to have more than 3. You might not have as many as 3. Maybe there's just one that you do. That's okay too. But we suggest not going more than 3.
Do I need to be precise in establishing categories?
You don't need to be precise in establishing categories, especially if you're a brand new business. You're not going to have enough data points to figure that out. You know, if you have a specific item like onion rings, for example, you know, as a restaurant owner, you don't need to know how many or how much it costs you to prepare an order of onion rings. You know, you get into a position where you're having to figure out you know, how much oil you used for onion rings and how much oil you used for French fries. And it's just, it gets too complicated. So you just kind of want a general idea of what you've sold and how much it is.
What are direct costs for each revenue group?
So the direct costs for each revenue group are the costs that vary based on how many units are produced and how many customers are served. So that's how you get your direct costs.
So your direct cost should move when your revenue moves.
Right.
For example, if you have a let's go back to the plumbing example. If you have the plumbing example, you will have materials that you will use. If you have a certain item that you use every time you do a service call, then that's one of your direct costs. Or even labor itself for your laborer wouldn't be your direct cost, because every time there's a service call, your labor cost will increase, right? Yeah. So that's what you wanna figure out, what items are necessary to perform the job.
That's right.
Yeah.
Yeah. And you should see that on your income statement. When your revenue is going up, your cost of goods or your cost of the services should go up. When your income goes down, you should see the cost of goods going down. It's kind of how you judge that.
Yeah, because that's how you get your margin on how much you have to charge to recover those costs and earn profit on it.
That's right.
Oh, I think I lost my place there, Denise. How do I get the average revenue per transaction?
Okay, so to get the average revenue per transaction, you want to divide the gross revenue for the revenue group in the prior year by the number of transactions in that group for the year. So that's basically how you get the average revenue per transaction. So divide the gross revenue for the revenue group in the prior year by the number of transactions in that revenue group for the year.
So, for example, again, on the plumbing that we have, you will look at all the gross revenue or the revenue amount at the end of the year from last year, and then think of how many service calls you did that year and divide it by that number. That means that's how much you earn per service call that you have on average.
Right.
Yeah. How do I get the average direct cost per transaction?
So to get the average direct cost per transaction, you want to divide the direct cost for the revenue group in the prior year by the number of transactions in that revenue group for the prior year. So again, the same basic idea, but you're dividing the direct costs for the revenue group.
And the remember, the main purpose of doing this exercise is to find out how much revenue, direct cost, and gross profit you're getting on a per unit basis, and as opposed to like per material or something even more detailed. As a small business owner, we want to be able to just know a figure that's relevant to us to make decision, to be able to make the right decision. Yeah.
Exactly.
What if this is my first year and I don't have any prior year data?
Yeah, good question. So the last two questions we talked about the prior year. If you're just starting out and you have no data to work with, what you want to do is you want to start with the average transaction cost, add the desired profit per transaction, and that's going to get you the average revenue per transaction. So then you want to compare that to the industry average and estimate a desired pricing structure. So does that make sense? You start with the average transaction cost, add the desired profit per transaction to get a proposed average revenue per transaction, and then you compare to the industry average and estimate a desired pricing structure.
So for example, on the plumbing again, let's say you have no data points to look at it, and really on your average service call, you would have to pay somebody for 2 hours. Let's say she's getting paid $20 per hour, and they will be doing the work for about 2 hours on average. That gives you 40, and so that's your direct cost. And then if you have your desired profit, which let's say I want it to be I want my cost to be a third of my profit or my gross margin, right? So you take that $40 and then you multiply that by 3. So you want to be able to charge $120 to be able for you to afford the $40 direct cost and still have the 2/3 as your gross profit margin.
Right. Yeah.
How do I get the average gross profit per transaction?
Yeah, so to get the gross average profit per transaction, you want to subtract the average direct costs from the average revenue per transaction. So just as Yahweh said, like when he was talking about the plumbing, if you take that, you charge $120 for a service and it cost you $40, then you've got that $80 left over as your profit.
Yeah, so your gross profit margin, this is different than your net profit at the end, because this is what you earn before you pay your fixed costs.
Right.
Yeah, so that's how you get your gross profit. Yeah, so I think that's all the questions we have for this part, at least for the business planning portion. I hope you guys stay tuned for the next video. If you have any comments or suggestions, please comment down below. And please don't forget to click like and subscribe for our videos, and we'll see you guys next time.